It's your boy Smith SMC, and I'm back again with another enlightening and educative video for the week. So last week was nice. I won't lie, last week was nice. So for those of you that have seen the video I dropped last week, please, if you have not seen it, please do well to go and view it and subscribe also. You like the video. So I dropped my entry strategy for good last week, and so many persons have viewed it, but they have not subscribed. So although I would totally say it's my entry strategy personally, I learned that from somewhere which is ICT. I learned that from ICT Model 2022. So that was where I learned that entry strategy from. You get? So that is that. So let's head over to what we have for today. My chart is kind of messed up, but don't worry. So let's move. So like I said before, if you watched my video last week, I said gold is still on a bearish move, but anything can happen in the market. Anything can happen in the market this week. Gold did a lot of things. So I'm just going to be showing you guys how I entered my trade last week and how I also used the same strategy I taught you guys last week to enter the market. That's what I'm going to be doing for this video. I don't really know what I'm going to title this video as, but that's just basically what I'm going to be doing. So if you watched the video of last week, you guys remember this particular box here, where I said I will be waiting for price to react from this box, then moving forward, pulling downward, of which price did. But what happened last week was something else. Price first of all moved downward before it went to go and touched it. On Monday, price was still trading down. Tuesday, price was still trading down. I think it was Wednesday, that was when the price went over to contest it and started what? Dripping downward with the red candle, although the red candle is not that healthy because it's like, this is a doji candle. If you can see it from here, this is a doji candle. Abi? Yeah, that's an indecisive candle. Yes, it's a doji candle. The doji candle. So let's head over let's continue. I'm just going to be showing you guys how I entered the market last week and how I used the same strategy I taught you guys last week to enter the market. Then I'll be sharing my point of view for the market for today. So please do well to stick around till the end. Watch this video to the end. Very important. So this was on Monday. I think this was okay, sorry. So I was this early, for those of you that don't know, this early QS is liquidity sweep. So what I was expecting for the market to do when the market opened on Sunday, this was a Sunday, I was expecting the market to move upwards to clear out this liquidity. You see this the reason why I placed it there in the lower time frame. To clear out this liquidity sweep, either this was a fib level, this is a fib level. This is a fib level. So I was expecting the market to clear the liquidity resting above here before it started moving downward. But fortunately the market just was pulling downward. So that was what I was expecting for on Monday, but the market did not even get to that place. Rather, the market was just pulling downward. So I did not trade on Monday. I was just observing the market. I did not even trade on Monday. So on Tuesday came up. On Tuesday, let me break it down backward. On Tuesday, this was on Monday. Tuesday, this was on Tuesday. This was on Tuesday. Let me break it down. Okay. So it's on. Alright, this was Tuesday candle. So let's move downwards. So this was on Tuesday candle. So I was like, price just moved downward without even like. So I was not expecting this drop on Monday. Like seriously, I was not expecting this drop on Monday. Please take note, this red candlestick at the bottom now. This is my previous weekly low, of which I normally do whenever I want to start trading the market. It's a liquidity. What's it called? It's kind of liquidity sweep. The reason for this one is maybe for example, if the market is on a bullish move, I will be expecting the market to first of all come and test to the liquidity that is resting below the last week. Let me explain. I know some folks not get it, but let me explain. This was last week's. Okay. This week. Okay. This was last week. Previous weekly high. So this you can still go to draw the new one for this week. So I was just expecting the market to come and touch this particular level, to react from this particular level because there's a liquidity resting below here. So you get. So that's just what this particular previous weekly low stands for. So of which the market did on Tuesday. Mind you, I was expecting the market has not touched this liquidity sweep. I was still expecting the market to come and retouch, like sweep this particular liquidity sweep before moving downward. But unfortunately, the market kept dropping. So that to the point of this previous week low. When you get to that previous week low, what the market did? The market reacted from that level. The market reacted from that level with this candlestick. With this week. So what happened on Tuesday was somehow for me, but we move. So when market was approaching this place, I didn't even think of waiting for the market to come to touch this particular level because where the market already gave me a signal. Don't worry, I will still explain. I will go to the lower time frame from this particular level without touching this previous week low to see the liquidity that's resting below it. Let me just move to so this is my entry level. If you can see something here, the market already did the what's it called? the market structure shift, which I taught last week. This was the market structure shift. The market was creating a lower low and a lower high, but fortunately the market was not able to create another lower low. Rather, the market break through this place. This was the market structure shift. The reason why this market took me out was that the market was still going to pull down to this level. So I was thinking maybe the market structure shift, then pull back to a fair value gap, which is this one. Then from that place, the market will start heading upward. That was what I was thinking. You get? You can either call this a fair value gap or a. If you should use the Fibonacci level, it will either be the 50% or the 60% Fib retracement level. You can also call it a point of interest. You get all those names. You can also call it a point of interest. So the market swept me at. I was targeting this level, of which I was still expecting the market to come and sweep this particular level. This particular liquidity sweep resting above here. You get? So that was why I entered the buy. I knew the market was still bearish. So that was why I entered the buy. But fortunately, the market hit me at. The market hit me at to this from this essence. Then when it gets to this particular level, it started shooting upward. That's what the market already took out the previous week low. Did a little bit of liquidity resting below there. The market started moving upward. There was still that chance for me to enter, but this one was not that pronounced as this one. This one was just kind of pronounced. Like you can see the break of market structure, then the pullback. Then this was supposed to be my entry level. This was supposed to be my entry level. I was just risking a little bit. This was supposed to be my entry level, which I entered. Then the market was swept me out. Then I was moving upward. This was the market structure shift here, but was not that pronounced as this one. So I just left the market. Then when I came to check the market the next day, like the next hour, the market just was move upward. So I was thinking, okay, the market also gives the same approach at this particular level. This was the market structure shift from this particular level, a little bit of market structure shift. Then I was thinking, okay, maybe the market wants to start pressing downward, or I want to continue the bearish move, but market hitting that and they continue bullish. Sorry. The main for this market was to target this particular, was to sweep this particular liquidity resting above here and took my this Fib level retracement. That was just the main aim of the market. Remember something, market only creates liquidity and balance liquidity. Market will create liquidity and also take out the what? Liquidity. This is how the market works. If it does not move on the straight line, if it's on the bearish move, this is what the market will be doing. So the market was creating something like this from this particular level. The market already pulled downward. So the market was creating something like to pull back to this particular level, then start moving downward. That was what the market. This was what the market was creating at this particular level. You get? So if it's on a bullish move, this is what the market will do. This is how the market works. This is how the market works. The market does not move on a straight line. This is typically how the market works. This is how your strength is being created. That is just it. That is just it. So I already observed. So that was what happened on Tuesday. Let's move over to okay, sorry. So that was that for on Tuesday. So let's move over to Wednesday. So let's move over to what happened on Wednesday. So for me, I already cleared my mind, okay, that this market wants to start want to take out that particular level. Like want liquidity that is resting above here. You might want to come and take it, and if you want to still push forward, you can still push upward. So that was when I went to the on Monday on Wednesday. I was just looking for continuation. If you can see something, the market has been trading upward, so there's no need for me to be looking for say at this particular level. So I just entered, like what I said before. So I just entered from this particular level. So this was what the market was creating. I didn't really use much of the strategy, so I just entered from the the pullbacks of the market. Just continue that particular trend. So that was how I entered the market. There was no kind of liquidity sweep in the lower time frame, or no, there was no liquidity sweep in the lower time frame. I just entered at the pullback, then the market it was my foot. This was 1:3 kind of trade. So the market has fulfilled its mission. So when the market has already fulfilled its mission of sweeping the liquidity that's resting above here and also touching this particular level. If I should draw it, you see that market touches this particular level. Immediately you can see what happened when it gets to that place. Immediately something happened. The market just started what? Sorry for this. The market just started pulling downward. The market just started pulling downward. That's to say the market already swept the liquidity that's resting above that particular level and touching this place. The market just started pulling downward. You can see this is a bullish engulfing candlestick. Sorry, bearish engulfing candlestick. If you should go to the lower time frame now, the 5 minutes or normally time I trade, you will see something. You will see something here. You will see something at this particular level. This is a typical example of uh sorry guys, I'm coming. This is a typical example of market structure shift. This is a typical example of what this was, the massive drop. This was what happened. A market structure shift. Immediately you know that okay, this market was aside was moving downward. If you say you want to start from here, the market will still eat you. Your SL. You have to put your SL somewhere, the market will still what eat it. So for you to enter from this particular level, you wait for the market to break this particular level to sweep out the liquidity that's resting above here. That was what I thought for the entry strategy. That was what I thought last week. My last video on YouTube. That was what I thought. You wait for the market to what? I don't really know if this is a trading hour. So you wait for the market to what, sweep the liquidity that's resting above here. But although you might be tempted to like take the trade from here because you already saw the pullback. But if you should look at it, if I should use fib level, that's my point of interest. You know, you can't call that the point of interest. If I should use fib level, it didn't even get to the 50% or the 60%. Number one. Number two, if I should use what's it called? If I should use a fair value gap, this is the perfect fair value gap from here. So it didn't also get to the fair value gap either. This particular one here, didn't also get to the fair value gap either. That was what the market came to create. But some of us, or if me myself I should see this one, I would like to test it. Okay, maybe there's where the drop, because the market is not that perfect. The market might just get to this place and start pulling downward without even going to that particular level. So that is how the market works. That is how the market works. That is how the market works. So let's head over to the next one. Please, if you know you are getting value from this particular video, please, I'm begging, I'm pleading. If this is the sort of content you like, please do well to subscribe. Mind you, if you are subscribing, you're not paying money for anything. You're not subscribing with money. You are only supporting me that is creating the video. You are only supporting me, thereby making YouTube to push this same video to say, okay, maybe as people are getting value from me, that's where they are liking, that's where they are subscribing to the channel. They will also the YouTube algorithm will also push it to other people that would like this sort of video. That is just it. So thank you. Please do well to hit the subscribe button, like, and comment. Very important. So so that was what happened on. So I hit SA here. I was correct in the direction from this one. This one I hit SA. I was not even correct with this particular one. Then this one I hit TP. I hit TP from this particular level. Then this was on Thursday. On Thursday, guys, see, it's kind of paid to follow your strategy. Like follow your strategy no matter what. Don't give. If you know that you have tested a particular strategy and it works for you, please do it to follow it no matter what. Follow it religiously. It's very important to follow it religiously. Do try your best. Discipline yourself to follow that particular setup religiously because it pays. It pays a lot. So that's just that. So on Thursday, I already marked out the liquidity sweep because I saw, okay, this was the last. There's a liquidity sweep resting above this particular level. Let me zoom it. There's a liquidity sweep resting above this particular level. So I already marked it out. So all I was concerned about was that, okay, if price should get to this level after the sweep of this particular liquidity, then the market will start dropping downwards. So the market put back to this particular zone, or this particular level rather. It's also a level I marked out for a reason. That would be a story for another day. There's a reason why this can't do it here. There's a reason why this is also part of my strategy, but that would be a video for another day. So the market already, the way I normally trade, when the market already touched this particular level, I was not supposed to start looking for sell because the market has swept the liquidity sweep with this particular level. The liquidity resting above it. I didn't draw it properly. I was supposed to put it at this particular place. So let me So the market already swept it. I was not supposed to take trade. I was not supposed to even take trade that day. You get? Or if I want to take any trade that day, for me to wait for the market to swing this particular level first, then before I will start considering or taking any trade of that day. But what I did was that I didn't wait for the market to get. I took the sell from the particular level. It was already on a little bit of profit. I didn't even shift my SA. I still left my SA here. Then the market moved downward, upward, and took me out. That was what happened on Tuesday. After what's it called? After liquidity sweep, the market started misbehaving and dropped downward massively. I wish I took this trade. Let me see if the market does take me out. If I took this trade from here, but I would have been thinking, okay, maybe this market wants to start. With the way this market is misbehaving, wants to start dropping. But the market does still hit me. God, does still hit me at then before it starts moving downward. Before it starts moving downward. So that is for. I was on Thursday. That was what happened on Thursday. So on Friday, or Friday overall was. Or Friday on its own was something else also. The market already touched that level I drew out. The market already touched it. Then I was now hoping for a buy, even though the market was bearish. The reason why I entered for a buy was for market to come and touch which level? This particular level. This is the liquidity sweep resting above here, this particular level. My mindset was that was what happened. My mindset was that if the market should touch, if the market should like what the market did here, there must be a drop from this particular level. That's what I was thinking. So I said, okay, let me just take it because I already saw my model here. My model, was a market structure shift. This is a market structure shift. Then the market pulled back, although it didn't pull back to, it did pull back properly to a feed level, or there was no this in the fair value gap there. So I just took the trade. Then when I took the trade, the market immediately started what pulling upward. The market started pulling upward. I was have to shift my my SA, but I left my SA. I didn't shift it. The market was started pulling downward. That was the same thing that happened on Tuesday. If you should pull back, if I should go move backward, that was the same thing that happened when the market took me at before the market was started, was going in my direction. Then the market pulled down a little bit, pulled down. This was supposed to be a proper entry for me. But guess what? I still didn't enter the market from this place. Then all I lost from here, I still recovered it. It's not that much, but I still recovered it. Recovered. So that was what happened on that was what happened last week. That was what oh god. That was what happened last week. So that was it. What really happened last week. So for this week, I'm going to be preparing for this week. This video is not that long. So that was what happened last week. So that is going to be all for this particular video. I won't lie, I've not checked. I've not done my analysis for what's going to happen for this new week. So that's why I'm not going to be talking about it in this particular video. So what this video is all about now is just to show you guys that the strategy I talked about last week works. It works. Okay, so just to show you guys my trade last week. Okay, so for this week, what I'm saying, I'm just going to be doing a rough breakdown. Let me check from the daily time frame. I think this is just my thoughts. I think there's still space for SA to drop. There's still space. Wait, can I do something else? There's still space for SA USD to drop because there's still a lot of space at the downside from the higher time frame perspective. So that is it for this video. So thank you guys very much. Thank you for your support. Thank you for your love. Please, if you know you have not subscribed, if you are watching this video, please do where to hit the subscribe button. Very important. Hit the subscribe button if you want to see my video often. And switch on the turn on the notification bell. So without further ado, see you guys on my next video. Trade safe and have a wonderful week ahead of you. Bye bye.